Hey, it's Merritt from S&B Futures, back for another recap of crude oil and the E-mini S&P Futures with key lessons learned. So let's dive into it. Today we started out with our hypo posts as usual. Just before the open here for crude oil, let's focus on it first. It's an interesting spot for crude oil to be in. Not quite the clarity we tend to prefer for real conviction. So those of you that have been watching the videos, you know exactly what I'm talking about. Days where we have clear conviction and are able to really see, trend days before they develop, all these kind of things. Didn't have that today. Today ended up being a wide ranging expansion day, quality range and movement. And we were able to participate in that very nicely, but we'll stay tuned for how that was. We waited for clarity, and we'll have clues in our hypos here for that. Given the overall breakout from the January balance area, I'm giving more weight to that bullish current condition, more weight to the bullish scenario. On the other hand, we saw tremendous effort from sellers yesterday and a potential for a more complex correction to unfold. So those two statements are conflicting, but we made clear that we're giving more weight to the bullish current condition. I'll play longs from 53.50s to 60s, but I usually don't phrase it that way, but look to take profits into 54.50s. As an aside here, so that's essentially hypo 1. A hypo 1A would be we may only pull back to the upper end of the overnight balance area, which is 53.80s, given we've already rejected from the 50s to 60s zone here overnight. Let's just pause there and take a look because that's kind of the main scenario. So we can start on the clean market profile chart here. Scenario 1 is for the market to pull into this 53.50s to 60s zone. Find buyers, take us up to 54.50. Secondary, because that's already occurred overnight, which was right here before the open, we may only pull back to this 53.80s and then go accomplish the same thing. So that's what we saw right into the open, pull back 53.90, right in front of the 80s, just a couple ticks away, and another one right there. So it's clearly giving us that opportunity, uptrend, holding above that overnight balance. Really critical. Understand that upper end of that overnight balance here, here, here. See the volume profile. See this distribution right where the volume cuts off there is where we're looking at, the upper end of that. So continuing on, back to pre-market prep. That's our main scenario. I may look for shorts from that 54.50s, that area that we have as a target to push to. So hypo 1 is to be a buyer from these areas to push up to here. Hypo 2 is to then short from that area. I may look for shorts from the 54.50s back down to 53.50s. So using essentially two levels with one intermediate level where we may get long, which we ended up doing, and the secondary short where we'd push all the way back down to the main level. Hypo 3 is a hold above that target area, which allows for, get this, clear sailing and taking longs on pullbacks with the intraday trend. In order for us to be trading up there, we're going to be in an uptrend. So we visualize that beforehand. But note the difference in the first sentence. Interesting spot for crude. Not quite the clarity we tend to prefer for real conviction. Got some good ideas, but not real conviction in terms of, hey, big movement, trend day is likely, we're looking for a move higher, blah, blah, blah. That wasn't the case. We were looking for a move up and then a short for a move back down, or lack of clarity. Then let's read the final point. A hold above 54.50s allows for clear sailing. Take longs on pullbacks with intraday trend. So that's it. A whopping 3 people liked that, so maybe it wasn't that good. We'll see. We opened up, tested that hypo 1A area. Beautiful spot right before the open. or here. Some students were long from there, which was fantastic. Either one of those spots, beautiful spots, goes right up into the area. Time to cut the trade, take profits, at least very heavily, if not flatten out. That was really the expectation for the move. So now it's time to see what can happen. At this point in time, I think this is really important to kind of go through the phases of almost real-time thinking. And if you want to scroll through the chat, you could see this thought from me as well. So once that happens, we shift to hypo 2, don't we? Hypo 1 is complete. We now may short from 54.50s. Targeting back down to here. So that's what I was looking for, stalking. But we made comments in the room. In fact, we could go pull it up. Here we are. We did a little impromptu webinar. 10:12. Crude not seeing quality selling for confidence in hypo 2 at this point in time. We'll continue to monitor. That's right here. Not loving what we're seeing in terms of should we really get on board with hypo 2? Not loving it. Myself and another student, we had some conversations around this as well. We were in perfect unison there in terms of dissonance, in terms of one narrative telling us we should be short from here, one intraday, reference saying buyers are still in control. So what do? Probably nothing. Probably nothing is the best answer there. Now, we're in hypo 2, bearish mode. We don't like the order flow. We don't want to get short. What happens? What happens? The clarity comes. Let's go back to it. A clear hold up. I'm sorry, that's ES. A hold above 54.50s allows for clear sailing and taking longs on pullbacks with an intraday trend. So we've got that level highlighted in yellow, 54.50s. No clarity, no clarity, no clarity. Little micro type break and hold there, which is not my favorite way of trading. I prefer bigger rotations. We get that. We get the pullback into the area. Perfect uptrend. Done. I didn't post the targets. But those of you that were on the webinar this morning saw some levels here and whatnot. I didn't really. I was really pretty. I thought that we would transition from hypo 1 to hypo 2 and kind of have more of a lackluster day, to be honest, because of that dissonance I was experiencing pre-market with my own prep. But once we got this, well, you can trade pullbacks, period. Trade pullbacks, go with the trend all the way up until the close. So I think it's important, this sequence right here, where we go from hypo 1, easy peasy, right? Nice clean pullbacks, you get involved, you have winning trades, period. Here's where I think we can kind of separate some of the more skilled traders from some of the lesser skilled traders, and perhaps even just experience. Knowing that everything is there for hypo 2. It is the level, the area you anticipate providing good risk reward to the downside. But that's why we get to the here and now. That's why we trade what is occurring rather than we want to trade what we think should occur. It's not just a play on words. It's a real way of life in terms of trading. So wasn't there. Then we could do an arrow here where we transition to hypo 3, where we get this nice little break and hold and move. Now we know exactly, with clarity, what to do. We get pullbacks, we go with it. All right, let's transition to the S&P. $9:38 a.m., 8 minutes after the pit session opened for the S&P. Overall, medium-term uptrend is intact. We can watch the value area from yesterday for shorter-term trade locations. Typically, when I revert to trading prior value area, that means I don't have much better to trade. So I kind of revert to that. prior value low would be an especially good location if we traded down there, which is the 93.50 area, which is this lower green line here, hypo 1 with the arrow to be up from that area. Hypo 2 is essentially break and hold above prior value high, which is at 0450 here. So our second arrow, chronologically speaking, is here. So break and hold above there. We look to get long. A clear hold below 93.50 allows for short opportunity, and we do give a target there way lower, 2660s, way down here. Okay, so third hypo expressed right there. What happened on the session? Well, it was really a chop fest. We were aware of the poor high from the prior day. We mentioned that if we did break and hold above 450, that'd have us gunning for easy excess to be putting it above the poor high remaining and get us in line with that overall trend. Obviously, that's an inflection. So really right off the bat, the market comes up and takes out that poor high. Doesn't really cleanly hold 450. Just kind of wiggles around at it and then tries to go, takes out the poor high, and finds sellers. That's kind of an early indication to me, not extremely healthy from the buyers. Chops around a bit. There's a kind of a weird little movement that occurred here, some volatility. We drive higher, back above 450, so we're back in bullish territory. We do get a nice little rotational play here. I thought that was a decent spot to enter. But guys, we ran into serious issues from that point forward. Extreme lackluster buying on the tape. Just very, very, again, I think the word is unhealthy for this session from the buyers. Very unhealthy. So that opened up some potential kind of cheeky plays and whatnot, but we'll stick with the basics here. If you were long from here, something was very, very wrong. You either got out of this trade into this area or once it started to turn here. And then what do we have? We're back at 450 again. But based on the way this is unfolding, based on the tape for the session and what's occurring, do we really want to be buying this level again? Up until this point, the buyers had, although there was some warning signs early that they couldn't do what they were trying to, up until this point, we've got quality order flow. That all gets destroyed into this up move here. So this is different. I don't just pick spots that worked and don't work and say you should have done it here and not here. My students know this, that we're able to see differences in pullbacks based on references, based on order flow, all the tools we use. So not a quality spot to get here. In fact, even just from a pure price action perspective, tries to bounce, fails at VWAP, tries to bounce, fails at VWAP, tries to get through VWAP, fails, tries to bounce, rejects VWAP. In general, is not leaving 450. At least even here, we came and chopped around and left it and then got below it. Here, it's try, not happening. Then we go below. So, small little scalp opportunity here. We still have 45 minutes left until the close at the time of me narrating this right now. So, my expectation is this was a good short opportunity in terms of kind of in between the hypos, right? We really want to be bullish from here or bullish from here. But if we see this pattern and a real disgusting bull order flow, lack of bullish order flow, this becomes a scalp opportunity to then target into this next level here, into whatever we said, 93.50. So that's what I'm seeing right now. Who knows what the close holds over the next 45 minutes. We could break and hold below here for even lower prices if things pick up. Otherwise, that would be kind of a destination for a short scalp. So that's what I am seeing in these markets. Happy Friday to you. Understand how to transition from hypo to hypo, where there's potential short-term opportunity, where there's big picture hypo opportunity, and act accordingly. We'll see you next time.